Welcome into the Friday, May 12, 2023 installment of Market Plus. Joining us again, Naomi Blohm, who, if you caught the end of the show, you saw her shoulders drop as the relaxation came from everything that you had put in. I'm holding her notebook hostage in case she needs notes, but she doesn't. How do you keep that in? No, seriously. That was an incredible job that you did this week. I mean, you were nervous.
Yes.
Why?
Well, there was so much information that came out today, just between the USDA report, old crop, new crop, and then so many new pieces of global news and global weather. And I always try to be as succinct as possible. I'm 45 years old and practice in front of a mirror. So any kids or teachers who are saying to their FFA kids, practice in front of a mirror, I still do it as an adult. So, well, thank you for the compliment.
Okay.
Appreciate it.
So, of all those stories that you talked about, I guess, wheat was the one that took up the biggest amount of time. What's the biggest story of the week?
It is hard to pick one. I think the geopolitical stuff happening behind the scenes that the China and the U.S. were talking was a big deal. I think this election in Turkey on Sunday is going to be a big deal because Putin is going to use that to his advantage. Whatever happens, he'll have a way to play it. Next week, the G7 summit. So they're going to try to probably do some more sanctions towards Putin. And the USDA report, just ultimately ending stocks for corn, beans, and wheat for old crop are tight. I know we knew that for the ending stocks for corn that they were going to make that number bigger because our exports had suffered, but it's been priced into the market already. And now we have all these geopolitical issues coming in and weather issues coming in. I did not really realize the extent of what El Nino does for Asia. And that was something new that I learned this week too. And so then I got, doing deeper research and then reminded myself how much wheat is grown in all of those parts of the world. And so this weather thing is going to be a big deal, all of it.
We didn't get any questions this week about why is all of this dryness in Kansas and Oklahoma and Texas not impacting the wheat market more? Well, it rained just a tiny bit, too little too late, although wheat's that crop that never dies, but it's in trouble. You said the market finally is realizing how dry or how bad it is domestically?
Yeah, so the wheat market, Kansas wheat, is about $1 off of its lows. So the Chicago market is still kind of lagging, but that Kansas wheat market took off. And again, during early trade today, it was up 50 cents because the news was friendlier than what they were thinking. The crop tour in Kansas starts Monday. That's going to really show what the recent rain has done, if it's fixed anything. From most of my clients in Kansas, they said that it's not going to help the crop, but it's nice to get the rain and just recharge the soil moisture in case they want to plant something else.
Pastures.
Pastures, absolutely.
Need a huge thing of that in Kansas and Oklahoma. Drought monitor did improve slightly, but it's still going to take a lot more to get rid of it. Dairy is something we kind of flew through. Not a lot happening, or is there?
It's kind of repeat the same story. Production is big. Domestic demand is kind of the same. The export market is doing fantastic. So last year was a record year for dairy exports. This year is only behind by just a little bit. So we have sufficient production of milk. And then the recent activity in Class 3 milk just depends on what the daily spot cheese values have been doing. Earlier this week, we saw spot cheese go higher. And then at the end part of the week, everything fell apart to 18-month lows. And that's why we had June milk go under $17. The deferred contracts, though, still hanging in there, near $19. It's kind of a little bit of an equilibrium. The Class 3 milk has been in overall kind of a downtrend for about 4 months, which makes sense because production continues to grow. So this time of year, there's usually some sort of a seasonal market rally for milk, but we need a catalyst. We need something to get it going. I don't know what it's going to be, but it's kind of been the same story.
Cotton has been on that downward trend, then sideways. Is it turning higher?
I think I finally might be pushing higher. I looked at that chart pretty extensively today between the July and December. They've been trading pretty similar price levels. If you really look at the big picture, it's a sideways market, but it had days where it's trending lower than higher. The USDA report today was on the friendlier side for cotton. And our exports, they're the lowest in about 5 years, but we are ahead of USDA projections overall. So the export market is picking up. And I found out this week too that the Chinese crop did not have a great start. They had such a cold beginning and some cold weather also. One guy said it's going to be down about 15% from a year ago. So again, China dealing with more weather issues might be why they're starting to have more conversations with different countries of the world and just extending their web of where they can buy commodities. I think they are just aware.
Hedging a little.
Absolutely, yeah.
Yeah, different sources. Okay, great questions this week. I have to apologize, Doug in Michigan. I didn't necessarily steal your question. I just used the majority of it in the analysis segment. Sorry. Let's go Paul in Minnesota. He had two good questions. We split them into two. Let's do the first one. How high, Naomi, will interest rates go, and how low will land go in the next 12, 24 to 36 months? Currently, interest 5.08 is the benchmark. Last week was our 10th consecutive increase in interest rates, and it's the highest we've been since September of 07.
The Fed has said that they're going to put a pause on it now. So we'll see if that happens, because now at least we have CPI, or the inflation has come down and it's around 5%. So I'm hoping that they do the pause to actually let the market take a breath and see what's happening and what is any new construction going on. What is the consumer doing? Are they buying cars or not? Are they, what is their demand doing? So I don't know if it's going to go a lot higher or not. My best guess is that it goes nowhere for maybe 3 or 4 months until we get a feel for what the economy is doing. I hope to gosh it does not go higher. I think just that would be devastating for the big picture, but I'm also hoping the economy doesn't have any huge crash and then they try to fix it quick by bringing it all back down too quickly too. So I think the smartest thing would be to just do nothing and just wait and see. That would be, I think, the best thing. And as far as land prices, I mean, overall, land prices are going to just continue to trend higher. We know that to be true. I don't know, it probably is just different depending on where people live as far as what happens in the short term. So definitely not my forte. Sorry, I can't answer that question any better.
How about this one from Paul? Will we see $4 corn and $10 soybeans before the end of the year?
Well, obviously that's up to Mother Nature. So if we end up having a absolutely perfect crop here, if we have those record yields like the USDA called for today, if there is no weather issues in Asia, like we talked about on the show, if it's perfect, yeah, you're going to have $4 corn at harvest and you'll have $10 beans at harvest. But there's definitely going to be some ebbs and flows along the way. Mm-hmm. And anytime it's on the higher side, make sure you're making the cash sales. Because the overall trend is starting to move lower with all of these things. And take advantage for this year and next year. And, and I remember when Matt and I were on the show in January, we both in January said, make cash sales for this year and next year. And those were your best prices of the year. Nobody wanted to do it because it had been higher all the time. Right. Understandable. That's human nature. Yes. But that's marketing where what works one year doesn't necessarily work the next. And so you always have to be ready for anything. But ultimately, Mother Nature, it's up to her. That's where it's at. Okay, this one I don't think is Mother Nature, but Robert in Minnesota wants to know, could the hog market turn into 1998 in the fourth quarter with plant shutdowns? We talked about Prop 12, but there is this discussion about sow reductions, plant shutdowns. So in the 98, prices got down into the low 20s. That was horrible. We had friends in college who were dealing with that, and that was really devastating to hear their stories. And I hope it doesn't happen. There's just so much. When we had COVID, prices got down into the 40s, and I don't think we have a full understanding of, what this Prop 12 is going to do for the American farmer yet. And I think that is why the hog market the last 2 days just kind of sat there and waited. So I don't know is the answer. Okay, fair enough. Let's do one more on impacting of speculative markets. Neil in Ohio, what impact will these biodiesel plants coming online have on our soybean market?
And how soon will these plants start producing? Can we overcome the lack of Chinese soybean imports with more usage by these plants?
The biodiesel story is absolutely friendly, and the renewables, it's friendly. If they all come online like they're supposed to, the thought is that the U.S. is going to need 10 million more acres of soybeans in the next 5 or 6 years, if they all come online. And so we won't be exporting soybeans as much. We would be exporting the meal. We, of course, would be using the oil. So we would be, I think, overall less of a soybean exporter. That's where Brazil is going to pick up the slack. But we'll be a major soybean meal exporter. I think that would be the reality. So it's a friendly story for the soybeans. It's good news.
All right, let's finish with Jake in Indiana, who will hopefully by the time he sees this will have gotten closer to being done planting. But he says historically June is always a bad month for cattle. Fats seem to be sideways right now. Are we staring at a cliff or a rocket ship a la 2014?
I think it's neither. I think we'll be just walking on a sideways plateau for a little bit because there's too many factors at play. You know, he's right. Seasonally, things do usually start to work lower, but we still are in a situation where we are tight on supplies, and so far demand is keeping up. So that's a little bit of a different tell for now. I think sideways. That's my best guess.
Well, I'm looking at that cattle market. We were looking at the feeder market and just how high it is, historical. At some point, these have to just technically retreat?
Well, we had a nice correction, actually. And yeah, talking with my guys, the demand for feeders is strong. It's getting stronger. I think pasture conditions improving, of course, for some places. It's encouraging. We'll find out over the next couple months for sure. A lot of it depends on feed and pasture conditions. That's the biggest thing right now. Demand has been okay.
Thank you, Naomi Blohm.
You're welcome.
Appreciate it.
Yep.
All right, great insight as well. Next week, we are going to look at how the new farm bill may affect industries that sprouted from hemp farming, and we're also going to have the analysis of John Roach. Thank you for joining us, and have a great week.